Everyone, and welcome back to Forex Scope. I'm thrilled to have you with me today as we dive deep into the exciting world of Forex. If you're looking for clear, actionable insights into currency markets, you've come to the right place. Here at Forex Scope, we're dedicated to bringing you expert analysis, precise buy-sell signals, and our best predictions for future price movements. Today, we're focusing on a hot commodity, gold. We'll be breaking down the action on both the 15-minute and 1-minute timeframes, so you can stay ahead of the curve. Before we get into the nitty-gritty, if you're new here, make sure to hit that subscribe button and turn on notifications. That way, you won't miss out on any of our future analyses that could help you navigate the markets with more confidence. Alright, let's get started with our gold analysis. This resistance zone is identified by a clear price action pattern where the market struggled to break above a specific price level. Observing the data, we see multiple candles showing rejection from this upper boundary. Specifically, the period between November 13, 2025, 12:45, timestamp 176-303-7900, and November 13, 2025, 13 o'clock, timestamp 176-303-8800, showcases significant resistance. The high price reached in this zone was 4,245.297, and the low was 4,225.906, indicating a strong battle between buyers and sellers. The price action shows that after reaching highs around 4,245.297, the price retreated, forming a strong selling pressure. This zone acted as a ceiling, preventing further upward movement for a considerable duration, with multiple candlesticks demonstrating bearish momentum or indecision at these elevated levels, hinting at significant supply entering the market. The presence of several candles that either closed lower after testing higher prices or exhibited long upper wicks signifies the difficulty in sustaining prices within this range. The congestion of trading activity around these levels further reinforces its significance as a resistance area where sellers dominated. This support zone is identified by a notable price action reversal. Looking at the data, we observe a significant drop in price followed by a strong bounce within the specified range. The period between November 13, 2025, 14:45, timestamp 176-304-5100, and November 13, 2025, 15 o'clock, timestamp 176-304-6000, clearly demonstrates this. The low price reached was 4,185.183, and the high within this consolidation was 4,200.921. This price action suggests that significant buying interest emerged as the price tested the lower boundary of this zone, leading to a substantial recovery. The formation of a bullish engulfing candle or a long lower wick on a bearish candle at this level indicates that buyers stepped in aggressively, absorbing the selling pressure. The subsequent price action shows a clear rebound from these lows, suggesting that this price area acts as a floor where demand outstrips supply. The volume accompanying these candles also supports the idea of accumulation or aggressive buying, which is crucial for establishing a strong support level. The sideways movement within this range before the next significant price move also highlights its importance as a zone where a battle between buyers and sellers took place, ultimately resulting in a demand-driven reversal. The resistance zone is identified by a series of candles between 1408 and 1432 where the price struggled to break above the upper bound. Notably, there was a significant bearish candle at 1408 with a high of 4,222.798 and a low of 4,214.593, indicating strong selling pressure. Following this, the price attempted to recover but repeatedly found resistance in this area, with multiple candles showing wick rejections at the upper end. The area between 4,211.749 and 4,205.011 exhibits clear price action patterns of sellers defending this level, creating a consolidated zone of selling pressure. The substantial volume seen during some of these candles further reinforces the significance of this resistance, as traders were actively participating in the price discovery at this level, ultimately failing to push higher and leading to a downward price movement. The repeated failures to break above this upper boundary signal a strong area where supply currently outweighs demand. The support zone is identified by the price action observed between 1444 and 1445, where the price found a floor and began to consolidate before a slight upward move. The candle at 1444 shows a low of 4,184.533 and a high of 4,189.918, marking a crucial turning point. This was followed by a candle at 1445 with a low of 4,185.183 and a high of 4,193.530, where the price bounced off this lower boundary. The presence of these two candles with significant upward wicks and the subsequent bounce indicates that buyers stepped in at these price levels. This zone represents an area where demand has historically overcome supply, leading to price reversals. The cluster of price action within this range, coupled with the clear rejection of lower prices, signifies a robust support level that traders can observe for potential buying opportunities. The consistent inability for the price to break definitively below this cluster suggests a strong accumulation of buy orders. The Fibonacci retracement levels from 4,188.376 to 4,205.89 suggest a potential pullback after a recent price move. Given the current price of 4,195.794, which sits within this Fibonacci range, we anticipate a short-term downward movement towards the 38.2% retracement level. The recent bearish price action on the 1-minute chart, coupled with the upper Bollinger Band acting as resistance around 4,194.6, supports the short-term bearish outlook. However, the established support zone at 4,185.183 to 4,195.338 on the 15-minute chart and the 1-minute support at 4,184.533 to 4,185.183 indicate strong buying interest at lower prices. Therefore, after an initial dip, we expect the price to bounce back and potentially retest higher resistance levels. The 4-hour trend and overall market sentiment will be crucial in determining the sustainability of any upward or downward movements. The interplay between these factors suggests a potential zigzag pattern, with a short-term bearish move followed by a bullish reversal, creating volatility that traders can capitalize on. The tick volume data also shows pockets of increased activity during these price swings, highlighting periods of significant trading interest.